We've all been there, tax season, a time most of us dread. We look at our pay slips, sigh and wonder, how are the ultra-rich getting away with paying so little in taxes? Today, we're diving into the world of tax deferrals and how billionaires are using legal strategies to bring their tax bills down to shockingly low amounts. You won't believe the lengths they go to keep more of their fortune. While we're sweating over receipts and agonizing over deductions, the ultra-wealthy, those billionaires with more money than they could ever spend, are playing by a different set of rules. They have teams of accountants and lawyers who navigate the complex tax code with ease. They've got an arsenal of perfectly legal tax strategies at their disposal, allowing them to pay a fraction of what we mere mortals cough up. These strategies are not just about finding deductions, they involve intricate planning and a deep understanding of the tax system. And the best part, they get to sleep soundly at night, knowing they've outsmarted the system yet again. They rest easy, confident in the knowledge that their wealth is protected and growing. So let's dive into the wonderful world of billionaire tax loopholes, shall we? These loopholes are not just simple tricks. They are sophisticated strategies that take advantage of the complexities of the tax code. From offshore accounts to charitable foundations, the methods are varied and often surprising. One common strategy is the use of offshore accounts. By moving money to countries with more favorable tax laws, billionaires can significantly reduce their tax burden. These accounts are often shrouded in secrecy, making it difficult for tax authorities to track the funds. Another popular method is the creation of charitable foundations. By donating to their own foundations, the wealthy can claim significant tax deductions while still maintaining control over the funds. It's a win-win situation for them. Then, there are the more complex strategies, like tax loss harvesting and income shifting. These methods involve careful planning and timing to maximize tax benefits. It's a game of chess, and the ultra-wealthy are the grandmasters. While we struggle to understand the basics, they are playing a different game altogether. It's a stark reminder of the inequality that exists in our society. But understanding these strategies can give us insight into the broader issues at play. So, as we navigate this tax season, let's take a moment to reflect on the system and how it can be improved. Knowledge is power, and by understanding the rules of the game, we can advocate for a fairer system for everyone. After all, we're all in this together, right? Let's face tax season with determination and a sense of camaraderie. Together, we can make it through, one tax form at a time. And who knows, maybe one day the playing field will be leveled and we can all sleep soundly at night knowing we've done our part. Until then, let's dive into those tax forms and tackle them head on. We've got this. Here's to a successful tax season, everyone. One of their favorite tricks is something called tax deferral. It's a strategy that allows them to delay paying taxes on their earnings until a later date. It's a fancy way of saying, I'll pay you later, maybe. This tactic is often used by the wealthy to manage their finances more effectively. Imagine you're a kid again, and you owe your sibling a cookie. Instead of giving it to them right away, you tell them you'll give them 2 cookies next year. Instead of handing it over, you promise to give them 2 cookies next year. This way, you get to keep your cookie for now and enjoy it, while your sibling has to wait. That's tax deferral in a nutshell. It's a way to delay the inevitable, but with a promise of something better in the future. Here's how it works. Instead of paying taxes on their investment gains right away, billionaires can choose to defer those taxes until they actually sell their assets. This means they don't have to part with their money immediately. This means they get to keep more of their money invested, allowing it to grow and compound over time. The longer they defer, the more their investments can potentially grow. It's like getting a free loan from the government, and who doesn't love free money? By deferring taxes, they can use the money that would have gone to taxes to make even more money. Of course, they'll eventually have to pay those taxes, but by then, they've made even more money off those deferred taxes. This strategy allows them to maximize their wealth over time. It's a win-win for them, and a bit of a head-scratcher for the rest of us. While the average person might struggle to understand the complexities of tax deferral, the wealthy use it to their advantage. Tax deferral isn't just for the super rich, though. Many people use it in their retirement accounts, like 401ks and IRAs, to delay paying taxes until they withdraw the money in retirement. By deferring taxes, they can potentially grow their retirement savings more effectively. However, it's important to understand the rules and regulations surrounding tax deferral to avoid any pitfalls. In the end, tax deferral is a powerful tool that can help people manage their finances and grow their wealth. But like any tool, it needs to be used wisely and with a clear understanding of the potential consequences. So, the next time you hear about tax deferral, remember that it's all about kicking the can down the road with the hope that the road leads to even greater financial success. And who knows, maybe one day you'll be the one deferring taxes and reaping the benefits of this clever financial strategy. Let's take a look at a real-life example. Imagine navigating the complex world of finance where every decision can have significant implications on your wealth and future. Imagine you're Jeff Bezos, founder of Amazon, a visionary who transformed an online bookstore into a global e-commerce giant, revolutionizing the way we shop and live. You're sitting on a mountain of Amazon stock worth billions of dollars. This stock represents not just wealth, but the culmination of years of hard work, innovation, and strategic thinking. But you don't need to sell that stock to live comfortably. Your lifestyle is already funded by other means, allowing you to enjoy the fruits of your labor without liquidating your assets. You've got yachts to buy, rockets to launch, and probably a spare island or two lying around. These luxuries are within your reach, not because you sold your stock, but because you leveraged your wealth in smarter ways. So, instead of selling your stock, triggering a massive tax bill, you hold on to it. This decision is not just about avoiding taxes, it's about strategic financial planning and maximizing long-term gains. Your wealth continues to grow, tax-free, until you decide to cash in. This growth is compounded over time, creating a snowball effect that significantly increases your net worth. And when you do finally decide to sell, you can use clever strategies to minimize your tax liability even further. This might involve charitable donations, trusts, or other sophisticated financial instruments. It's like a never-ending game of Monopoly, where you get to keep all the properties and never have to pay rent. The rules of the game are different for those who understand how to play it well. Fun for them, not so much for everyone else. The disparity between the ultra-wealthy and the average person becomes more pronounced, highlighting the advantages of financial literacy and strategic planning. But it's not just Jeff. This approach is a common thread among the world's wealthiest individuals. This strategy is used by countless billionaires across various industries. From tech moguls to finance gurus, they all understand the power of playing the long game. They understand that time is their friend when it comes to taxes, and they use it to their advantage. By deferring taxes and allowing their investments to grow, they can amass even greater fortunes. The key takeaway here is the importance of patience and strategic planning. It's not just about making money, but about making your money work for you over the long term. Educating yourself on these strategies can make a significant difference in your financial future. Whether you're an aspiring entrepreneur or someone looking to secure your retirement, understanding these principles is crucial. It's also about sharing this knowledge. Financial literacy should be accessible to everyone, not just the elite. By spreading awareness, we can help bridge the gap and create more opportunities for all. The financial landscape has evolved over the years, but the principles of wealth accumulation remain the same. Those who master these principles can navigate the complexities of the market with confidence. As we look to the future, new tools and technologies will continue to shape the way we manage our finances. Staying informed and adaptable will be key to leveraging these advancements. Remember, playing the long game isn't just about wealth, it's about building a legacy. It's about making decisions today that will benefit you and future generations. So take a page from the playbook of the world's wealthiest. Be patient, be strategic, and most importantly, be informed. Your financial future depends on it. So what do you think? Are these billionaires gaming the system, or are they just playing by the rules? Let us know in the comments below. And if you want to learn more about how taxes really work, hit that subscribe button for more deep dives into the world of finance.